Hi there, this is Chris Ruspe. I'm a chartered market technician and a certified financial planner. I've been a professional for over 3 decades, and today we're going to be talking about 3 green tax tips in honor of St. Patty's Day. Hope you have a great day. Hope you're wearing a little bit of green, like I am, so you don't get pinched. And don't forget to pinch your loved ones if they forgot to wear green. That was always a big deal around my house around tax season. Also, hope you're not suffering from allergies the way I am. Boy, the plants are growing ferociously on St. Patty's Day 2022. Okay, so what are the 3 tax tips? The first one is that you can actually submit your tax return as though you made a deductible IRA contribution, even though you haven't done it yet. And then when you get your refund back, you're able to use that money in order to make the contribution. So the way that this would work is that you would mail your tax return, say today on St. Patty's Day, and you would say you made a deductible IRA contribution. Now keep in mind you have to qualify to make that contribution. But you'd say, I made a deductible IRA contribution, even though you hadn't done it yet. That's going to lower your income taxes. When you get your tax refund back, you can take that money, you can actually use it as a contribution to the IRA. The only real bad thing about this strategy is you really have to remember to do it because no one's going to remind you. Second strategy we like to use is what we call the Super Roth IRA contribution, or the backdoor Roth contribution. And the way that this works is that currently you can't make a Roth contribution if you have too much in earnings, but you can make a backdoor Roth contribution. All you have to do is contribute your money to an IRA first, and then move it, have your financial firm move it from the IRA to the Roth. And believe it or not, that actually qualifies as what's called a backdoor Roth contribution. It's a little bit of a pain for your financial planner, but it's well worth it to get that money away from current taxes and future taxes. The other thing to be cautionary on with Roths is that you're paying taxes voluntarily today. If you're using a Roth 401k, you're paying taxes voluntarily today that you wouldn't normally have to pay. So make sure that you understand that that's only going to pay off as long as the government honors their promise. And we all know how trustworthy Congress has been. The last secret I want to give you is just kind of like a personal secret that I use. I use deadlines throughout the year to try and encourage myself to do things that I find unpleasant. Obviously, calculating how much you owe to the tax man is not pleasant, but what's even worse than that is paying taxes that you normally wouldn't have to pay. And what I've noticed is that tax preparers, people that calculate how much you owe, are really, really, really busy throughout the year, not just during the first third of the year, but throughout the year with various tax filing deadlines. A lot of times they have difficulty finding the time to be proactive and help you actually put strategies in place to lower what you're going to owe. That's where a financial planner should come in. We'll be talking to you throughout the year on all factors that impact your wealth levels. One of them is trying to lower your taxes. So my suggestion to you is to use the tax filing deadline as a deadline to encourage yourself to do something proactive to lower what you're going to have to actually owe next year. It's just a secret I've learned, and I think it'll work for you as well. Those are our tax tips on St. Patty's Day. Hope you guys enjoy a green beer if you're allowed to have one of those and you're over the age of 21. And we'll be back next week with another timely tip on how to improve your financial life. So make sure you subscribe to our channels on YouTube, Facebook, Twitter, and LinkedIn. Thanks. Have a good day.